In the third quarter, we produced over 447,000 vehicles, delivered over 497,000 vehicles, and deployed 12.5 gigawatt hours of energy storage products, a record for both deliveries and deployments. What's very interesting about these results is that if you've been following the channel, you've been following the Tesla space, the last couple of years have been crazy. Hey, everything's getting freaking firebombed. Elon Musk is getting into politics. Everybody was calling for the demise of Tesla stock. If you remember this statement from Tim Waltz,
I added Tesla to it to give me a little boost during the day. 225 and dropping.
Unfortunately for Tim, Tesla stock is still about twice the price of where Tim Waltz called the bottom. Now the very famous Tim Waltz bottom. So thank you very much, Tim. Back to some serious stuff here. The thing I really want to cover is the strategy that Tesla has taken here in the third quarter and what this probably means for the quarters upcoming. If you look at the difference between deliveries and production, Tesla delivered about 50,000 more cars than they produced in the quarter. So they delivered 497 and they produced 447. If you look at their history of deliveries and production from the last few quarters, you'll notice that they've been building up some inventory on their cars. If you look back to Q2 of 2024, so this is a little bit over a year ago, they delivered 443, they produced 410. So they sold 40,000 more than they produced. In the third quarter, they did about the same, 460,000-ish. In the fourth quarter of 24, they delivered more than they produced, about 40,000 more. By the fourth quarter of last year, but this was something that Tesla has typically done in the past, is they sell through their entire inventory at the end of the year to try and sort of hit a goal or try to hit some sort of number for the quarter or for the year to hit the expectations that the company has had. But then, of course, what that means for the quarters that are coming up is that they would have to build some sort of inventory, either because of higher pricing or all this political stuff that was happening. They produced more than they delivered. So they produced 362 in the first quarter. They delivered 336. They produced 410 in the second quarter. They delivered 384. So they started building up about this 60,000-ish inventory surplus that they had through their channels across the globe in China, Europe, the US, etc. Now in the US, they had the EV tax credit for the third quarter expiring. So they were able to use that to sell through quite a bit of inventory. But now what's happening is Tesla's sort of coming back to this position where their days on hand of inventory and the loss is going to be less because they sold a lot more than they produced for the quarter. Now the question becomes, what's going to be Tesla's strategy moving forward? Now with the EV tax credit gone in the United States, the company needs to figure out a way how to sell more vehicles to keep up that 500,000 per quarter level ongoing to reach their eventual goal for the near term that the company has communicated, which is about 3 million cars per year. That's how much production capacity they have, basically how much room they have to make cars. One of the things they did yesterday was release this Model Y Performance, which they have on their website now. It starts at $57,500. This is sort of a fast version of their best-selling car, the Model Y. But that's different from what a lot of investors and a lot of fans expected from the company. There's this little bit of verbiage that is in the earnings reports from Tesla from the last few quarters. We continue to expand our vehicle offering, including first build of a more affordable model in June, with volume production planned for the second half of 2025. Additionally, we continued development of Semi and Cybercab, both slated for volume production in 2026. And so now the question becomes, what are going to be these new products? What are going to be these new offerings that Tesla is going to bring to market? The reality of the situation is for Tesla to continue growing for the foreseeable future, they're going to have to figure out how to sell more affordable vehicles if they want to go down the path of selling cars that people can drive. If you follow this channel, you know I've spent a lot of time trying to figure out what the hell this thing could be, this more affordable car. I even said they could come out with a car with a joystick. In hindsight, I think I may have been a little too sleep deprived when I came out with that video. Pretty sure it was in the middle of me, just having our first child. But again, I'll let that live. I'll let that joystick car video live. Anyway, but they have to figure out a way to really reduce the cost of these vehicles. What's probably going to happen here in the next, who knows, it might be today, it might be when they go through their earnings report on the 22nd of October of this month, which we'll cover on this channel. It could be some other date, maybe when they release FSD V14, which is their new version of FSD. They're going to have to come out with a more affordable car. The likeliest scenario that I can think of is that they will probably just release a more affordable Model Y and a more affordable model, meaning that they'll have the kind of the same car, but they'll have cloth seats instead of nice seats. Maybe they'll remove some features. They'll figure out how to maybe save money from a trim perspective. Who knows, it might limit some features on the screen. I highly doubt that would do that. That would be kind of a bummer, really a big bummer if they do that. But the other thing they could also do is just sell the cars at cost. Based on some of the preliminary math, none of this is investment or financial advice, but it looks like Tesla's probably going to add about, I don't know, somewhere between, let's say, $3.5 and $5 billion of cash to their balance sheet from operations, from running the company, both from the growth in energy, which is at 30% margin, so they're making quite a bit of money on that. And of course, with a higher sale of cars, their costs will go down because they were able to push more cars to the factory to bring the per car cost down. So they're going to get more money. They're going to make more money on their vehicle sales. If they continue on that path for the coming quarters, looks like the sales in China look strong. Europe has made a big bounce back. They could, in theory, use that money to fund a program for more affordable Model 3s and Model Ys, where maybe they take, I don't know, $8,000, $10,000, $12,000 off the starting price of the Model Y or the Model 3, and then sell these cars at cost, sort of less features, then depend on things like FSD, self-driving, to make the money back on the back end. Tesla has done a lot of work to get FSD, the self-driving suite, up to a point where customers are becoming very happy with it. It's still not perfect, but it's working extremely well in most situations, to the point where they're able to have a driverless network in places like Austin. And with V14, from the company's guidance, it sounds like this thing is going to take the performance of the software to the next level. Theoretically, to the point where the driver no longer would have to pay attention in a lot of situations, which dramatically increase the value proposition of the vehicles they would sell. A very simple way of thinking about this is, okay, would you buy a RAV4 for say 35 or 38 with all the options you want, a Toyota RAV4, that you have to drive? Or would you buy a Model Y, Tesla Model Y, for about the same price, maybe a little bit more, maybe 40, but then you would have the option to not have to drive, in addition to all the tech and all the other stuff that Teslas are known for. I think that's going to be Tesla's strategy here for the next year or two, is they're really going to try to push FSD, especially with V14, especially if it becomes unsupervised, as the main selling feature for their vehicles, to the point where they don't really have to make that much money on the cars themselves. They could sell them as a vehicle, no pun intended, to sell the software, which is the self-driving suite. It'll be like a super advanced printer model, okay, where there's a lot of companies back in the day, I haven't used a printer in like God knows how long. The printer companies wouldn't make money on the printer, they would make money on the ink. So something very similar here with Tesla is they're not really making money on the car, they're making money on the software that powers the car. And then that same software is going to be used to power their Cybercab, their robotaxi network in places like Austin or California, or in places like Arizona, which they just got approved for, and other states that are looking to approve this as well. On top of the fact that we have a Secretary of Transportation, is Secretary Duffy, that is quite friendly to companies like Tesla, that's quite friendly to people like Elon Musk, to the point where the federal government has talked about creating a federal framework for electric vehicle makers, or any car maker, to be able to run driverless networks all across the country. This will put Tesla in a very prime position because they have the scale. Right now, Tesla, as you can see from this last quarter, they're making and selling 2 million cars per year. And so that's 2 million cars per year that Tesla would be able, theoretically, to add to a driverless network that would vastly outstrip anyone else's capability. If you just think about Uber has about 1 million active drivers in the United States today, about 8 million globally. Tesla would be able to make, in theory, twice the amount of Uber's existing fleet in the United States every single year with their existing capacity, without adding any new vehicles. Their existing fleet, double the amount of Uber's active fleet every single year. And then on top of that, if you really think about it, with an Uber driver in the United States, on average working probably 40 to 50 hours a week, with a self-driving car, it doesn't have to sleep, doesn't have to take a break. So each one of those cars is at least double as capable, even triple as capable, because they drive during the weekends. Humans like to take breaks over the weekends. They're essentially making 5 times Uber's active fleet of people in labor equivalent in self-driving cars. That is where Tesla's long-term ambitions are. And I think what we're going to start seeing here in the coming quarters, again, not investment or financial advice, as my baby's tired, he probably needs to go to bed. I don't know if you can hear him in the background. What this points to is that Tesla's really going to start pushing, I think, a very strong narrative, especially into next year, that People need to stop thinking of Tesla as a car company, which they've said many times. We've said it many times on this channel as well. The broader public has to think of Tesla as a true physical artificial intelligence play because they are actually proving it out. People get in their cars, they no longer have to drive in almost every scenario. Just talk to most every owner, or basically every owner that you know that has a Tesla, that has the latest software. Even though there are some issues here and there, most of them will probably say that they're no longer driving. And if you're a Tesla investor following this story, this is going to be something that you're really going to be focusing on, because this is really going to dictate the next 5 to 10 years of the company. In addition to taking the foundation that they're building for their self-driving network, that same foundation is going to power the human or robot. And this is one of the main reasons why I've partnered with Rebellionaire to sponsor this video. If you have at least $2 million in Tesla stock, Rebellionaire could be the best partner for you to reach your financial goals. Matt Smith and Bradford Ferguson, who run Rebellionaire, have been longtime Tesla investors. They follow the Tesla story very closely. If you follow YouTube channels like mine and like theirs, you probably know exactly who I'm talking about. These guys work with Tesla investors who may have outsized positions, very large positions in Tesla, where a typical investing manager would say, you got to sell some, this is crazy, like this is nuts, you shouldn't be doing this. Bradford and Matt understand the Tesla long-term thesis, and instead of judging you for having as much Tesla stock that you do, they'll work with you to reach your financial goals. They'll employ tactics like covered calls, adding and trimming, and other tactics as well. This is all backed up by a bunch of analysis and research that they've done. Bradford and Matt have done things like cross-country FSD trips. They actively research the energy sector, the AI sector, the robotics sector, the electric vehicle sector, obviously, and any other adjacent sector that helps them understand the long-term potential of Tesla. And so if you're somebody who's tired of getting the cold shoulder from traditional investment firms that are gonna scold you for your Tesla position, and instead you want to partner with people that actually understand the Musk economy and the Tesla story, feel free to go to rebellionaire.com/Farzad, rebellionaire.com/Farzad, and that's how they'll know that I sent you. Thank you so much for watching. I hope this was informative and helpful, and we'll see you in the next one. Take it easy, everybody. Bye-bye.